The Nigeria and European Union on Thursday signed finance agreement worth 900 million euros for development projects. The agreements were signed at the EU-Nigerian Strategy Dialogue in Abuja. It informed the central part of the EU-Nigerian cooperation to advance the country's green, resilient, digitally inclusive transition on the government priorities and global gateway. Developed jointly between the EU and Nigeria, the first signed agreement will drive new programs through Global Gateway, which includes climate smart agriculture, which is 29 million euro, sustainable energy, which is 37 million euro, access to health services, 45 million euro, and education support to youth and education development in the Northwest region, 5.4 million euros. In addition, the second signed 46 million euro agreement will also contribute to building access in Nigeria's social protection safety, support to border management and reintegration of returnees, which is 28.4 million euros, support to the disarmament, demolition and reintegration of Boko Haram combatants in the Northeast region, which is 20 million euro, and support to improving the criminal justice system, access to justice and fight against corruption, 30 million euros. The third signed finance agreement was a loan issued to two Nigerian private companies and banks by the European Investment Bank as part of the Global Gateway strategy. The European Commissioner for International Partnership, Jonta Opilani, said the EU would continue to invest in priorities of security, democracy and prosperity for all. The Minister of Budget and Economic Planning, Abubakar Bagudu, stated that the EU-Nigerian relations were one of the most vibrant development partnership in terms of program, thematic intervention and geographical spread in the deployment of resources. The Secretary to the Government of the Federation, Judge Akume, and Professor Ezekiel Willams have said that a proper taxation system will end the borrowing of loans by the federal government to fund projects. They made this known on Thursday during the launching of Professor Willams' book, The Taxation Pendulo, at the Transcorp Hilton Hotel in Abuja. These followed the recent move by the federal government to get a fresh $400 million loan from the World Bank for the conditional cash transfer to 15 million households as one of the measures to cushion the effect of petrol subsidy removal on Nigerians. The 400 million euro will bring to $1.2 billion the amount that the federal government is borrowing from the World Bank for the cash transfer, as it had earlier secured a loan of $800 million for the same purpose. President Bola Tinubu announced the conditional cash transfer to 15 million households in a nationwide address to commemorate the country's independence on October 1st as part of the measures to cushion the effect of the subsidy removal on petrol, which has led to an astronomical rise in the cost of living. It also announced that the federal government would commence the payment of 25,000 naira monthly to 15 million households for 3 months from October to December 2023. Speaking on Thursday, the SGF, who was represented by the Permanent Secretary, Political and Economic Affairs Office of the Secretary to the Government of the Federation, Unko Uswabana, said all tiers of government need to be vested in taxing citizens. He also said citizens must be committed to paying taxes as and when due to avert a situation whereby the government will be worried about raising funds for the project. Also speaking, the author Williams noted that the book explained the intricacies of tax laws, the need for citizens and cooperation to pay taxes, and the action expected of the government in utilizing the taxes collected from citizens and corporate bodies. Acting Chairman of the Federal Inland Revenue Service, Zach Adedeji, has allayed fears being expressed by a corporate organization that the resolve of FIRS is to increase the country's tax-to-GDP ratio to 18% from 10.86 will lead to increase in taxes. In a statement, Adedeji said such resolve will not necessarily lead to increase in taxes or introduction of new taxes, as the President Bola Tinubu-led administration was determined to create a wholesome environment for businesses to flourish. The FIRS chairman had said the agency would, or rather under his leadership, would be the next 3 years achieve 8% raise in tax-to-GDP ratio to surpass Africa's average of 16.5% without stiffening investment or economic growth. The plan had triggered muffled apprehensions that the decision would cause an increase in tax rates or introduction of new ones. Addressing representatives of top large tax-paying companies during a get-together in Lagos on Wednesday, Adedeji said their belief, understanding and vision as the revenue-generating agency is not to introduce any new tax, as they only want to use data to improve compliance. The statement by Special Advisor on Media Communication, Dare Adekombi, quoted the FIRS chairman as saying that the invited companies and those willing to voluntarily carry out their tax obligations had nothing to be afraid of. The Minister of Finance, Olusegun Agaga, has explained that the Naira would continue to be weak if the country remains an import-dependent country. Aganga, speaking on Thursday at the third Adiola Odutola lecture during the 51st Annual General Meeting of the Manufacturers Association of Nigeria, said Nigeria must produce for local consumption and, more importantly, for export for the Naira to be strong. The local currency fell from about 450 per dollar on an average of 760 per dollar following the exchange reforms of President Bola Tinubu. The local currency plunged to 1,045 per dollar on Thursday at the parallel market. But Anganga, speaking on the free-fall Naira, said this is the wisdom in spending billions depending the Naira when it continues to fall, instead of investing in genuine manufacturers and exporters of high-value product that would earn Nigeria foreign income and more. The former minister charged the government to declare the industrial sector a national priority sector and back it with plans, policy, and money. Meanwhile, the president of the Association of Bureau de Change Operators of Nigeria, Dr. Aminu Gwandabi, says achieving a stable, stronger, virally exchange rate in Nigeria will require the full participation of Bureau de Change operators in the retail segment of the forex exchange market. In a statement, he said under the current leadership at the Central Bank of Nigeria, the country has all it takes to achieve a strong and stable exchange rate and build a highly liquid forex market to support the domestic economy. On the challenges confronting the nation's forex market and depreciation of the Naira, he said it required the BDCs to be fully involved in providing lasting solutions to the ongoing volatility in the exchange rate. Gwandabi said the continuous depreciation of the Naira in both official and parallel market did not benefit the DBCs, and the domestic economic steps should be taken to reverse the trend and strengthen the local currency for maximum impact on the economy. The statement said that the Naira on Tuesday crossed 1,001 Naira to the dollar mark at the parallel market, even as it continued to weaken considerably at the official market due to persistent dollar scarcity and speculative activities of illegal forex dealers. Gwandabi said the several measures by the Apex Bank to bridge exchange rate gaps show genuine intentions of the regulator to entrench exchange rate stability, but getting the BDCs involved in the solution recipe would bring desired result of not only a highly liquid market, but stable rates.